Good evening, grade 12s. So I'm going to do just a few lessons on the cash flow statement, because I'm not sure if you understand it very well yet. So as you know, it's got three sections: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So we are going to start with cash flow from operating activities. So this includes stock. So whether you're buying it or you're selling it. So when you buy it, which is trading stock, it's cash outflow. Then we are selling it, which is sales, that's cash inflow. And then when you are selling it on credit, you've got debtors. So when the debtors pay you back, that's cash inflow. When you buy it on credit, and then when you have to pay the creditors, that's cash outflow. And then the income includes still under operating activities, that will be the sales and any other income, like if they're renting property and getting the rentals in from the tenants, that's also income. And then expenses, all expenses really, but we normally focus on interest, dividends, and tax, because the rest of the expenses are taken into consideration when we take the profit, when we take the net profit, because the net profit already is income minus expenses. So all these income and stuff are taken care of there in the net profit. And then these extra ones, they come after profit. So we deal with these ones. So now, we are still going to stick to operating activities, cash flow from operating activities. So this is the formula for cash flow from operating activities. So you have cash generated from operations. This one comes in the form of a note where you have the net profit, you add depreciation, you add interest expense, you get the subtotal. And then you get the net change in working capital where when the inventory decreases, it's a positive, because you didn't buy more. But anyway, okay, let me say this, we can deal with it in detail on the next lesson. Yeah, let's deal with this in the next lesson. I just want to concentrate on this now for this lesson. So this, now you're going to have the note, and this total is going to come here. We call this cash generated from operations. And then the interest paid. The interest paid is very easy. There is usually no opening balance or closing balance. There's nothing outstanding. So you take the interest amount as it is, and you put it in here. And then the dividends paid. So now, dividends paid is going to be cash outflow, like just like interest. If it's in brackets, it's outflow. And if it's not in brackets, then it's inflow. So interest, so dividends paid, there's twice every year that we deal with dividends. So we first have the interim dividends, which is paid out during the year. And then we've got the final dividends, which is only paid out in the following year because it's calculated after year end. So let's say this is 2020. We do the interim dividend we paid, and then we've got the final dividend, which we don't pay. So in 2021, our cash outflow is going to be this 2020 dividend, because we're only going to pay it in 2021, plus the interim dividend of 2021, because we're going to calculate a new dividend in the middle of the year, and we pay that. So you add both of those, previous year's final dividend and current year's interim dividend. That is a cash outflow. That's what we are going to pay. The final year of this year, which is 2021, is only going to be paid in 2022, so we don't count it. And then taxation, the formula is opening balance plus current taxation minus closing balance. So this is under the assumption that all the opening balance and the closing balance are credit balances, which means we owe some. So opening balance plus current tax minus closing balance, because that's what we're going to pay. We're going to pay the opening balance and the current tax, but we're not going to pay if it's out. If there's a closing balance, then we didn't pay anything. I mean, we didn't pay that amount. We didn't pay everything. That's what I wanted to say. So, but if the amount is a debit, you change the sign. If the opening balance is supposed to be a plus. But if it's a debit balance, as in SAS or SAS, then we are going to make it a minus. So minus opening balance plus current tax. And then if the closing balance is also a debit, we are supposed to minus the closing balance. Then you add it plus closing balance. So that's what we do. So yeah, so that's what you get in the statement cash flow from operating activities. So let's see an example. I'm going to use this so this is week term 1, week 6 of which says cash flow statement consolidation. So we are going to go to activity 1 and see if we can do that one. So, but it's asked in different ways. But for now, let's just go to activity 1. So activity 1 will be on page 5, starts from page 5. So we're not going to do the ordinary share capital note because we've done that in previous slides. So, or previous lessons. So we're going to now start with the cash flow statement. So this is the cash flow, this is the information, and this is where we need to do the cash flow statement. So can you see this one, the cash generated from operations, we are given this amount. So now the next one then is going to be interest paid. But let's use an Excel sheet because I won't be able to do PDF. So this one we are given already. So this one we are given already. And then the next one is going to be interest paid. So like I just showed you, after interest paid, we can get dividends. The order doesn't really matter. So dividends paid, and then we have taxation paid. So now we need to figure out how much that is. And we already know that these amounts are going to be negative. So let's go to the exercise. So the interest paid, like I said, it's not complicated. You take, there is the interest and loan. There is the 82,000. You just take it as it is because there's usually not an amount owing. Everything is going to be paid. We work under that assumption. So 82,000, you take it as it is, and you're going to make it a negative. So in my Excel file, I'm going to put a minus, but when you write it down, put it in brackets. We can use brackets to indicate a negative. Then the dividends paid, like I said, we take last year's final and this year's current. So let's see. How do we know that this is the last year's final? So these shareholders for dividends means that they are owing us. Shareholders for dividends means that they are owing us. So this one is last year's final. So we take this. This is the last year's final because that's what they owe us. So we are going to say 210,000. So that will be dividends, so 210,000. So now how much now is the amount for this year? So plus the interim for this year, not the final for this year. That's what we need. So interim for this year, do we have it? Or maybe we'll probably, most of the times we need to calculate it. Interim dividends of 20 cents per share was declared and paid on 31 December. So 31 December. Okay, they worked out the note. So let's look at this note. So 31 December will be 800. Let's just check quickly. I did not. Oh, now I cannot get to the next sheet. Okay, let's go back. So on interim dividends of 20 cents per share was declared and paid on 31 December. So the last thing that happened, so it was before the repurchase of shares. There is a repurchase of shares because that is now 1 January. So before the repurchase of shares, let's use that. So before the repurchase, so it was 1.2. Our film is 1.2. So let's do that. I'm going to see if I can calculate it here. So it's there, so it's going to be 20 cents. So 0.2 is 20 cents. times 1,200,000, if I'm not mistaken. Let me use my calculator. If I can find it, that should give us 0.2. I could have used Excel, but okay, 1,200,000. That gives us 240. I hope you also got 240. So that will be 240. So that gives us, so 240 plus 210. That will give us 450. That amount will be 450. So that will be dividends paid. So it has to be minus 450. And then taxation paid. I said opening balance. I'm going to write it here. So opening balance. Okay, let me just write it. Opening balance plus current tax minus closing balance. And then we take into consideration that if it's a debit balance, okay, opening balance, let me say credit opening balance, and credit closing balance. So that if it's a debit, you know that the signs change. This is a plus, even if it's not written, this is a plus, this is a minus, but this one won't change. So so let's check now. So the opening balance is going to be, let's go back to this one. The opening balance is, so this SARS income tax. The opening balance is a debit. So it would have been plus 8,000 if it was a credit, but since it's a debit, it's going to be minus 8,000. So we're going to say minus 8,000. Minus 8,000. And then plus the current. So the current, you always find it on a separate, so it will be here. Current income tax. Sometimes you might need to calculate it, but at least here is calculated for us. 75,600. So that's the current income tax. That will be plus 75,600. And then the closing balance is a credit balance. So there's no change in the sign. So we have to minus it. We still minus it. Minus 12,500. So it's going to be minus 12,500. And that gives us, I'll use my calculator. I was using it. That will give us minus 55,100. If I'm not mistaken. And then, you know what the box means in accounting? You're going to add this and put the answer here. So I'm going to use Excel and add this and sum it up. Let me not say add, let me say sum. If it's a minus, it's going to be minus. If it's a plus, it's going to be plus. So that now is how you work out the cash flow from operating activities. So sometimes it may not come in a table. They might just say what is cash flow from operating activities. Then you just open a bracket and you put the cash flow from operations. Then you say minus in that bracket, and then you say minus 82,000 minus 450. You can work it out separately, and then minus 55, and then you get your 52. So just know this concept so that in whatever format it comes, you're able to do it. So we're going to stop here now for the with regards to the operating activities, and then I'm going to do investing and financing. Bye for now.